So yeah, Latka, over to you.
That's great. Thanks, guys, for having me. And it's nice chatting with so many of you guys in the comments before getting going. You know, this is a fun opportunity to connect with you guys directly. Happy to jump into my stuff, but I'm really excited today to talk to you guys about how much power you have. As founders building SaaS companies in India, you guys have so much power today. And what I mean by power is money, capital. You have so many fundraising options that we haven't touched on. So that's what we're going to focus on today. And I want to make sure, obviously, technically, I get all this set up working properly. So can you see my screen okay?
I think it is loading. Yeah, we can see you.
Great. Perfect. Well, guys, this is great. Again, I am in the chat live reading your guys' comments. So I encourage you guys to engage with me as we go along here. Go ahead, guys, real quick, just so I can customize the presentation. And I want to meet all you guys. So this is your only time you'll get to sort of spam the comments with a link to your company's website. So go ahead and hop in chat. Let me know which company you guys are building right now. Just type it in the chat. And if you're bootstrapping, type bootstrapped. And if you've raised, just type how much you've raised. Go ahead right now and do that in the chat. Raj, thank you so much for the kind comment on the Shark Tanks. I appreciate that. It's good to see you here. Venkatesh, let me know what you guys are building. Arivind, Shivam, go ahead and let me know what you guys are building. There's about a 10-second delay between me talking and you guys hearing it. So I'll wait a second as I see what you guys are building. So Anushri is building Longshot.ai, bootstrap. Congratulations. We love, obviously, bootstrapped founders keeping total control. We've got Time Doctor in the house. We love Time Doctor. A lot of remote teams using Time Doctor. Shivam, good to see you here. So guys, yeah, don't be shy. Go ahead and let me know as you're hearing this. Again, what company you're building and if you're bootstrapped or if you've raised in the chat. We've got Spectre here outlined. Karn, good to see ya. Economize.cloud in the house. Very good, guys. I love this. Well, guys, what we're going to focus on over the next 15 to 20 minutes is how to raise $1 million in under 72 hours. And a lot of folks, you guys might not even realize that this is possible. In fact, even in the United States, where I'm from, a lot of people don't realize that this is possible. And that's because you have so many options today. Now, how did I get into this world? Well, I started interviewing SaaS founders, and I have to give a shout out. This is not at any means an all-encompassing list, but some of my favorite founders I've interviewed with India headquarters or founded in India, I have up here on the screen, sorted by sector in terms of revenue ranges. So Ideal Analytics, sub $1 million. We've got 1 to 5 million, Just Call, vTiger, View. We've got 5 to 10 million, folks like Persist and OrangeScape. And then obviously 10 million club in Zoho's case, obviously way more than 10 million, right? We call it, say, $500 million plus. We got Zoho, Mindtree, Razorpay with big news. And one of the things I'm going to touch on today as we go through this is you guys are inventing incredible new business models. And the folks from Scribe that were on actually right before me were talking about how as a VC fund with about 200 million in assets under management, they're seeing a lot of companies do what's called a SaaS plus model. As a founder, you will have more power getting capital if you think about SaaS plus today. And what SaaS plus means is it's a recurring business model plus something else. It could be an IoT device you're selling. The plus could be a GMV percent that you're taking from a marketplace. It could be a percent of GMV if you're processing payments like Razorpay. But that's what SaaS plus means. So shout out to some of these folks. And the reason I want to give that shout out is because we all have these unique stories. And this is where mine started. You're seeing it, Pratik, on the screen right now. Monica, good to see you with Trav Stack, right? You're seeing it on the screen now. Now, I was sprinting across the field here in the Eastern United States. I was 20 years old. I was in college, and it was freezing cold, but I was sprinting to this newspaper stand. And people watching had to have been thinking, why is this guy running? Have you guys ever tried to run with a backpack on? You look silly because it like bounces hard on your back. But I was sprinting across the field at my college after this newspaper stand. And this was the reason. I'm going to the next slide. This is why I was sprinting towards that newspaper stand. Take a look. Now, what you guys see here is a moment where, as an entrepreneur founder, I thought, I have freaking made it. I have made it. This is the newspaper in my town. I was on the cover in what's called the A1 spot. The A1 spot just means, those of you that know press and PR, A1 spot is the front page of the paper that most people see it with a big image in the headline. You see a picture of our offices there, and it says big deal in Blacksburg. And look at right here where my mouse is. You can see what the headline was. It says, billionaire Randall Kirk has invested some of his venture capital fund in the fast-growing startup. And that startup was Heyo, my company, Nathan Latka, Chief Executive Officer. And I thought I had made it. But this was actually the start of the end, because look what happened on the next slide. Take a look at our board deck. Now, this board deck was right after we raised. And Sridhar, I want to say hello, pioneering a micro SaaS, $99 or less at iMenu. We love that. We'll jump into iMenu here later. But look at our board deck after this raise. I'll let you digest this for a second. Now, Shamali, this is large enough where you can read the numbers, right? Or is it blurry?
It's kind of blurry. Can you zoom in?
Yeah, let me just make it bigger here. Is this better?
Yeah, a little.
Okay, yeah, so I can't control size in the Hopin interface. You guys have to double click the screen and make it bigger yourself if you want to see these numbers larger. But what you see here, these blue columns, right? That's how much revenue we were doing in United States dollars. This was back in April of 2012, right? So you see there, April of 2012, fourth blue column from the left, we were about to break 100 in revenue, $100,000 a month. And right when we raised, Abhi, can you see what happened there when we raised that green line? We took the first chunk of the 2 million, so we got 400,000 extra in our bank. But look what happened when the green line goes up. What happened to the blue column, our revenue column? Can you guys see it there? Can you guys type this number in the chat just so I can see if you can see it? If you can see my mouse right now, type this number in the chat. This was 4 months after we took the first chunk of the 2 million we raised. This is what our monthly revenue was. Type this in the chat if you can see this clearly. And what you're going to recognize, and what I encourage you guys to think about, is when you raise capital from VCs from the traditional sense, you sell a bunch of equity, you get less creative as founders, and your team gets less creative because they know that you've raised, which means every time you come up with a problem, the answer is throw money at it. And yes, you guys you're close. 89,403. Pratik, you're looking here at 92,019. One more over, 89,403. The point here, though, and Karan, you got the one before that, 94,549. The point is, it's decreasing. You're supposed to raise money and go up, right? You're supposed to raise money and go up. Like, what's going on? Now, Abhi, you asked a good question. Why did your SG&A skyrocket? Well, because you raised capital and the investors say, spend, 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 invest, right? They want you to spend the money you just raised. But in my head, I'm going, wait a second. I just went from, I own basically 90% of the company. We're doing 1.2 million annually. We're profitable. And now I just sold a big chunk of my company and we're burning a bunch of, like, what's going on here? I liked my old life better. Look how nasty this got in terms of a cap table. Now, guys, yes or no in the chat. How many of you guys have a cap table or you manage your cap table? Are you guys all familiar with the cap table? Just type heck yes in the questions if you guys are familiar with cap tables. Here's what and by the way, nobody shares this. Nobody shares this because their lawyers would go crazy. I share it and you got to share it in the keynote. When I'm talking to you guys, I got to share it. Look how nasty our cap table got. This is a special for SaaS Insider. Okay, but look how nasty this got. Now, ignore the left side for a second. Take a look at the right side. All right, Niraj, you with me? Shivam, you with me? Look at the right side here. So I'm going to go down the list. That last column in the Excel spreadsheet is the ownership percentage that people owned of my company, Lejour Media, doing business as Heyo.com. So an early angel owned 2.8%. An early developer owned 0.76%. One of my co-founders owned 4.98%. Now, can you guys see what I owned right here? Where it says me, type that percentage that I owned in the chat where it says me. Type that in. Now, while you do that, I'm going to keep going down. Another co-founder owned 8.17%. Okay, another adult supervision CEO, 8.9%. And Pratik, you're right, 38%. That's exactly right. I own 38% of the company. So I sold a massive chunk. So where did the equity go? Where did it go? Well, look, Series A investors, they invested $2 million at an $8.5 million pre-money valuation, meaning post-money was $10.5 million. Hari, Prasanna, you with me? Prasanna, good to see you, by the way. Familiar face. Good to see you, man. Okay. So that's 20% Series A, but they also require, they said, Nathan, you're 21 years old. You need a professional gray hair COO. Jamal, you heard
Of
this
course, a
before?
lot of times.
It's the worst. It's the worst. Sometimes the more gray hair you have, the worse you are because you have to unlearn old
Yeah.
habits. You know what I mean? It can be bad. It can be really bad. And so they required I hire the adult supervision CEO. So when you add it all up, they got 20% here plus 10% to an adult. So I sold 30% of the business in that transaction. Pratik is laughing at me saying it happens with all the youngsters. But look how messed up this cap table was. And guys, here's what will surprise you. If you go hardcore at trying to get a TechCrunch headline or the newspaper headline like I did, you're going to end up selling a massive chunk of your company. And that's fine. But you have to build a massive pie if you do that. And even when you build a massive pie, let's say you make it to IPO, you're going to look like some of these guys on the left. Scott Dorsey took ExactTarget public, owned 3%. Aaron Levy took 5.7%. Vox public, 5.7%. Henry Schuck just took ZoomInfo public like a month and a half ago, owned 10% of the business. Eric Wan did the best job at Zoom, owned about 20.5%. We'll see if what Girish does, obviously, at Freshworks, that's potentially an IPO coming up in the India SaaS ecosystem. We'll see what happens there. But point is, it's highly dilutive. Is there a better way? Right? Is there a better way? And I discovered a better way because I've interviewed over 2,200 SaaS CEOs personally on my podcast, ranging from the founder of WordPress, Matt Mullenweg, to, again, we just talked about Freshworks, to get Sid, the founder of GitLab, to Looker before Google bought them for $2 billion, right? We did this all via my podcast, The Top Entrepreneurs. It's a daily podcast where we interview SaaS founders. I encourage you guys to check it out. But I started hearing a trend interviewing these CEOs about a better way. And I put it all in this chart that I'm about to share with you guys, okay? Shivam, you nailed it, by the way. Like Mark Cuban says, do you want a larger piece of a smaller pie or a smaller pie to yourself? What I would say about that, you have to look at risk and probability. It's much harder to build a larger pie, even if you get a smaller piece. We never hear about the companies that shut down after they raise a bunch of VC, or they sell, but the founders get nothing because of liquidation preference. We never hear about those. You actually have a way better shot at building a $5 million SaaS company that's profitable, that you own 80 or 90% of. Sure, VCs will tell you it's a small pie and you should grow faster, but guess what? You're in full control. And if we like building wealth and getting rich, there's nothing wrong with a profitable software company that you control, where you pay yourself dividends and maybe you pay your employees dividends as well, and you all are very happy and you build a great company. You'll never be in the newspaper. You'll never be in TechCrunch, but it is a great way to build a life where you're happy and free. And there's absolutely nothing wrong with that. So how do you have this power? It comes down to 6 ways, whether you're in India or Africa or somewhere else on APAC, 6 ways to raise capital without crazy equity. Now, we're going to go down this chart. Number 1 is you sell equity, right? So we're going to start with what everybody knows. Andreessen, NEA, First Round, Scribe, right? Any of these guys come in, they buy a chunk of your company. What does that cost? What does that cost? Well, guys, do any of you guys know when venture capital firms raise money from their investors, they promise sort of an IRR target, an internal rate of return? Do any of you guys know what that IRR typically is? Jamali, do you have a guess there?
Not really. I am very new to that space, but I'm sure Prasanna would know about it.
Mm-hmm. Yeah. Does anyone have any ideas? If any of you guys investors in VC funds, what return do you expect from the VC fund? It's the top quartile of VC funds. You've got to be beating 40% IRR. 40% IRR. Prasanna, what you just said, that's really average where a lot of them come in, but it's very hard to raise a second and third fund if you're only earning a 25% IRR. You've really got to get into the 40% range for your LPs to be happy and to go raise a second fund. Okay, so your cost to capital as a founder is going to be at least 40%, especially if you're taking from one of these top firms. So this is the first way to raise capital. We obviously know what this looks like. Second way, they do this usually on a SAFE. I'm not going to dive into a SAFE because there's a lot of information online about it already. But a SAFE is basically how a lot of these firms will write the first check into your company. Third way to raise capital, SEALs. New asset class here, guys, SEALs. This stands for Shared Earning Income Agreement. Shared Earning Income Agreement. It's a SEAL. And what this means, okay, Ashwin, we'll use you as an example, right? Let's say, Ashwin, you want to raise $100,000, right, for your company. The way that SEAL works is I, as the investor, write you a $100,000 check. You would then pay me or have the option, let's say I get 10% of the company for 100 grand. You would have the option to pay me back over the next, whatever, 5, 6, 7 years, but at a 3x multiple. So you could pay me back $300,000 to buy back 7% of the 10% equity I bought originally. So I'm still going to own 3% and have 3x my money back. And you bought back 7% of the company. That's what a SEAL is, okay? Shared earning income. Now, this is a very early asset class. Companies like Earnest Capital, Tiny Seed, NDVC doing this. But together, they've all deployed, all combined, less than 20 million in total capital. So it's a very early asset class. Abhi, I do not know of, and guys, if you guys have resources, especially if you're an investor lurking in the comment section right now, speak up. If you're doing this model for Indian SaaS founders, you should say it right now in the comments so we can give you a shout out. Okay, to give you a shout out. Abhi is saying, I love the chat, right? So that's number 3. Here is the fourth way. How many of you guys are familiar with RBFs? Okay, RBFs. There's a lot of revenue-based financing options for founders today. And the way that RBFs work is you can get up to, call it 3, 4x of your monthly recurring revenue today. So let's say you're doing $50,000 a month. You could get, let's say, 3 times that. So $150,000 check today. Okay, are you with me? Prasanna, exactly. Sridhar, Abhi, exactly. Lighter Capital, RevUp, Bigfoot Capital, Flywheel in Southeast Asia. Okay, RBFs. So again, $50,000 a month today. You could maybe get up to $150,000 from an RBF provider like Lighter Capital, right? You then pay them back 1.5 to sometimes as high as 3x that money. Okay, so you take 150 grand today. Let's say you pay back 2x. So you pay back $300,000 and you pay it back as a percentage of how much money you make top line every month. That percent is usually 5 to 10%. Okay, so if you're doing 50 grand a month, you take money, you pay back 10% per month, you're paying back $5,000 per month until $300,000 is paid back. 2x the $150,000 you took originally. Okay, originally. We'll talk, Sridhar, about that in a second. That's AR factoring. SaaS Capital Prasanna, that's not an RBF. That's usually a term sheet. We'll get to them in a second. An RBF, though, guys, it's a percent of your monthly revenue, a multiple, paid back over a period of time with a repayment cap as a percent of your gross monthly receipts. That's what you keep in mind. Now, why are these an issue? Let me just start by saying, because of the podcast, I have helped founders raise almost $160 million, okay, worth of capital in this asset class. And now I'm going to stop sharing my screen for a second so that you guys can blow up my face. Literally right now, I'm working on deals, right? Here's a Lighter Capital term sheet I'm working on a founder with, right? Let me see what else, other deals here, right? Here's one with Espresso Capital, right? There's the term sheet right there, right? So I'm working with founders, right? Here's one with ScaleWorks. Okay, I'm working with founders. You know, here's Tamaya Capital, right? To do deals with all these debt providers. And this started about 4 years ago. And as I helped founders raise this capital, I started watching them how they paid back the money. And I realized how expensive it was. It was extremely expensive capital, north of 20% effective interest rates, like you're seeing. I'll put back up here on the screen. Okay, north of 20% interest rates. It's extremely expensive capital. You have prepayment penalties. You have warrants in some cases. So let's go to the 5th option. Right? We're going through 6. The 5th option to raise capital without selling crazy equity is term loans. Now, again, some of you guys have just mentioned Tamaya, SaaS Capital, right? Things like that in the comments. Now, Sridhar, you say show off. You know, there's a lot of people that talk about this that don't actually do it, right? The reason I'm doing what I'm doing is because I'm helping founders actually do it. I want you to know and see that I'm literally right now helping founders raise additional debt. I've helped founders raise almost $160 million worth of debt over the past 4 years. So I've seen this stuff play out. This is not theory. This is like real. We're in the term sheets right now. So I don't do this to show off. I do it so you go, oh, he's doing it. This isn't, some guy that just writes books and isn't in the weeds. I'm in the weeds. And so term loans are the fifth option here. And these are fixed interest rate instruments. So here you can raise up to maybe 6x your monthly recurring revenue. So let's say you're doing 50 grand a month. You could raise $300,000 today. You pay it back on a 2 to 4 year plan, somewhere an interest rate between, it's usually above 10%, somewhere between like 15 and 23, 24%. But the point here is it's a fixed interest rate. Okay, it doesn't change like an RBF as a percent of your monthly income, sales. Okay, it's a fixed interest rate. And so one of the things, Monica, I appreciate that. Thanks, guys. One of the things that I want to do with you guys is actually run through an example. So guys, let's just sort of run this real quick. How many of you guys, just type founder in the comments right now. How many of you guys are founders? How many of you guys are founders? And Shivani, while they're typing that, I have to tell you, you and your crew have done such an incredible job. I haven't seen a conference put on in India that has gotten more SaaS founders together than what you guys have done. So I have to tell you, congratulations. You're building something very special here.
Nathan. So we had almost 22% of our registrations to be founders. That came as a surprise to us as well. You could see in the chat how many are actually putting up the word founder up there.
Well, this is why I do it, right? We want to learn from people. Rahal, nice to meet you. Ratish Reddy, Amrish, Arun, lots of founders. We love this, lots of founders. So guys, if you're cool with this, what I want to do, you guys obviously know how big your business is. I'm not going to ask you to put your current revenue in the chat, right? You guys probably want to keep that private, some of you. Instead, type in the chat, if you could raise some capital today without selling equity, and it's money that you would use to run your next experiment. It could be a sales hire and an engineering hire in Bangalore, right? It could be anything. Some Facebook ad spend focused on India SaaS companies. How much money would you want right now to run that next experiment? Type that amount of capital in the chat real quick. Gopinath, we're going to chat about your question right now. Okay. His question was, Nathan, wouldn't there be too much pressure to pay back on these term loans? I'm going to walk through an example right now. Okay, going to walk through an example right now. Okay, so Isaac said, Nathan, we'd love to raise $300,000. Nirman saying $1 million. Sandeep saying 50K. Karn saying 100, 200. So guys, I'm going to actually give one of you guys a term sheet right now so you can see how this actually works real time. Shimali, are you cool with that? Okay, so guys, we're going to test Hopin right now. Hopefully we don't break it. You guys should see a button in the upper right of Hopin that looks like this. Shimali, and you tell me if I'm wrong here from the admin perspective, but one of you should be able to see this. If you click that button, I can bring one or two of you guys on live with me, right? And we'll use one of you guys as an example. So if you have your audio and your video connected, click that button. Niraj, I'd love to have you on. You want 500,000, love to have you on. Rahal, I'd love to have you on 500,000 as an example. Ganasan, 150K. Shimali, will the tech work?
Yeah,
will it support this?
I'm just waiting for people's request to come in. Has anyone requested, or is it just me?
Yeah, guys. So don't be shy, right? And I'm happy to do this without one of you as an example, but it's way more valuable to just use with one of you guys as an example, right? So Shimali, I'm going to keep moving forward. If you are able to do this with somebody, let's bring them in. If not, no big deal. Right. Okay, no big deal. But Hari, if you can bring someone on live, you do that. But I'm going to keep moving forward, okay? So guys, here's how the example works. Now, I am going to go in, and I'm going to pick one of you guys. So I'm going to use Arun, okay? Arun, you said you'd love $150,000. So again, I'm going to share my screen here. I'm going to stop sharing my slides and I'm going to share a window. Okay, so here we go. Now, Founderpath is my company. And one of the things that I want to do is help founders understand how their term sheet could work without having to sit on a phone call and try and meet with someone at a debt company and do a bunch of work. So we built this calculator. Now, I encourage you guys to do this along with me, right? So the way that you would do that, I'm going to put it in the chat right now. You can go to that link, okay? You can go to that link, and I want you to type in the number, scroll down the calculator, and type in the number, right, that you just typed in the hop-in chat. Type it into the calculator. So Isaac, you would type 300 grand. Sandeep, you type 50,000. Karn, type 100,000. I'm going to use, Ganasan, I'm going to use you as an example, okay? So I'm going to type in $150,000. Boom. Now, look what happens over here on the left, guys. It's spitting out sample terms, okay? So if you use a term loan and you want to raise $150,000, and any of you can do this, by the way, this isn't just, you don't have to come to San Francisco or move to New York to do this. We have deals with Indian founders right now that are done. We'll have almost $10 million deployed into SaaS companies around the world. A good chunk of those are actually in India, right, by the end of the month, right? So you guys can do this right now. Here's what the terms would look like. You would essentially be paying back once per month, $4,200 per month for 4 years. Now, Gopinath, to your question earlier about, or Gopinath, sorry, I mispronounced your name. The way to prepare budgeting for this is this way. This is the question you have to ask. Can you guys take $150,000 today and add more than the cost of the loan, more than 4K in MRR? Now, guys, what's 4K in MRR annually? About 50,000, right? About 50,000 annually. Okay, take 4,000 times 12, right? So about 50,000 annually. So the question really is, can you take $150,000 today and add more than $50,000 in ARR, right? That's $3 to get $1 of ARR. You guys are pretty freaking creative. Ganasan, I bet you have found a way to spend $1 on CAC marketing to get just $1 of ARR. So could you just take $3, right? And get $3 in ARR, a 1-to-1 ratio? That would put you way in the money. And what I mean by in the money is if you take on 50 grand today, you make more than the cost of the loan and you grow your SaaS company, you keep 100% of your company and you grow it using someone else's capital, mine, right? Or another debt provider. And I'll give you a list at the end of the session so you can look at other debt providers too. Okay, but Rahul, I'll answer your question. Is this immediate payback from month 0? Yes, Rahul, it's a fixed monthly payment each month, once per month. So that's the way to think about how that works. Now, let's say you didn't want that amount of capital. Let's say you wanted something that wasn't 4 years. Maybe you're going to sell the company in 2 years, so you don't want such a long-term instrument. Well, if you click how much can I get on Founderpath, what that will do is that will take you to the point where you actually can set up your own account, and you will see this. I'm going to show you our demo account. Okay. On the back end, you will get a credit score from us, a SaaS credit score. It's basically us telling you how healthy or not healthy your SaaS company is. And if it's not healthy, we'll tell you how to make it better, right? So we'll look at things like retention curves over time. We'll give you that data and tell you how to improve it, right? So retention curves over time. We'll go in and look at, revenue burn. We'll look at customer concentration risk. We'll look at all these different metrics. And once we analyze these metrics, right, this is MRR growth over time, right? Once we analyze these metrics, you see this Get Capital button? You can click this. Yeah. And Shamali, this is where, again, I'm just going to tell you guys, most SaaS companies we've worked with in India have used this option instead of a term loan. Mm-hmm. If you click payouts, what this will do is it will list a bunch of your customers that are currently paying you monthly. And you can turn a bunch of them on. So this guy's paying us $500 a month. If I turn it on, you'll see we'll advance you 10 times their MRR in cash today. You then pay it back over 12 months, $500 per month. And you can get up to 1x your MRR, right? So this is more like accounts receivable factoring. So there's term loans and accounts receivable factoring. But the reason I want to show you guys this interface is so that you could understand the economics on both. A shorter term payback of 12 months, but you can take less money, or a term loan structure where you get a chunk of cash up front, paid back over 2 to 4 years at a fixed interest rate. Both options are available. And the reason, again, I show you this is there's a lot of folks that are not ready to take debt right now. But Gopinath, to your question earlier, the way to understand what the payments would look like is to log in and just look at these offers live. They'll sit there for you, and you can sort of jump in there and get them whenever you want. Nirman is saying a recording of the session would be helpful. Jamali, is the recording going to be available?
So Nirman, it will be available in a few days once the processing is over on YouTube. You'll also be notified.
There you guys have it. Yeah, that's great. Good. So this is number 5. We just talked about term loans. We have one left, and then we're going to wrap up. Okay. So the last one that I want you guys to know about is this one. Okay. Can you guys guess it? Last one here. This one. Get forward to it. Bank debt. Bank debt. Okay. SVB, CIBC. Now the key with bank debt, they will not give you capital unless you have raised from a VC. They are not doing an analysis on the health of your SaaS company and your churn. They are seeing money, a VC like Strive, just put into your company, and they are giving you a loan because they see the cash sitting in your bank, right, from the equity. Now, if you don't want to sell equity to a VC, that basically means you can't access bank capital. This is a massive market. I think the future of great SaaS founders will be bootstrapped founders who keep control they don't have any board to answer to, and you build a $5-10 million company. So this is sort of the screenshot, guys, that I recommend you take. If you're going to take a note from this is a screenshot. And if you tweet this out to me, if you screenshot this now and you tweet this out, Shamali, what's your guys' Twitter handle for this?
Sorry, I didn't get the last part. There was a bit of problem with the audio.
What's your Twitter handle for this?
It's SaaS Insider.
Okay, put it in the chat. Put it in the chat. There we go. You just did. So guys, if you take a screenshot of this right now and tweet it to me and Shamali, SaaS_insider, I'll send you back a link to this full deck so you have it. Okay, so you have it. There's a lot of really good questions coming in, and guys, we'll jump into all of them. I'm going to wrap up now the presentation, right? So 6 ways to raise capital without crazy equity. Again, back to my story where I made a big mistake and raised VC. This wasn't the right fit. So on that note, again, I want to say thank you to you guys. And what I'll do now is I'll jump in and Shamali, we have 2-3 minutes left.
We have only 1 minute left.
Okay, very good. So guys, let me go on real quick, answer some of these questions. Abhi said, Nathan, how do you account for default risk? Abhi, we already have about 1,500 SaaS companies connected to Founderpath. And so we're tracking almost 30 billion in revenue and 35 billion in expense data. And our algorithm is really good at understanding which SaaS companies we can lend to, and we know we'll get paid back, and which ones we can't lend to. If we can't lend to you, we'll tell you why and help you improve your metrics so you can unlock capital with us. Does that answer your question? Diraj said, how are you securing these loans? Do you have to pledge anything providing security for these loans? Diraj, what you're essentially pledging, like the way we're confirming these loans, we're looking at your customers. Right? You actually connect Stripe or Chargebee, right? Or whatever you use. Big Round, by the way, they're coming out of India recently. I think it was a week and a half ago, Big Round. But we use these tools to see how much revenue you're doing and how sticky your customers are. And that's how you unlock capital. Okay. That's how we unlock capital. Guys, in terms of the onboarding, again, I encourage you to just try it. I mean, go to founderpath.com. There is no, to Monica's question, what's the collateral background check you need? There isn't a background check we do. We connect to your data sources. We give you a credit score. And with a button click, you can go in and essentially decide to take capital or not. A lot of people just use this for the metrics portion. So guys, I did tell you before I leave, I would give you a list, okay, of all the debt providers. So let me do that real quick. Here's a list of almost 60. Okay, there's 60 debt providers there. These are all providers that I've helped founders already raise capital from. So I know what their term sheets look like. I just kept a big list with the average terms. I just put it in the chat. On that note, and Rahul, yes, you do have to have revenue. If you're pre-revenue, we can't do a loan. I don't know if you mean pre-revenue when you say pre-seed, but you have to have revenue, obviously, to get a term loan bank debt or an RBF or things of that nature. Niraj, we're working on integrations with ChartMogul. ChargeBee, we're getting launched as well. So these are great questions. Guys, if you have other questions for me, you should right now just shoot me an email, nathan@founderpath.com. I'll get back to it before I go to sleep tonight. It's almost midnight here where I am, but I'll get back to you. And the last thing is, guys, again, Shamali had me on. I said, Shamali, I know I'm not building a company in India, but I would love to get $100 million deployed to India SaaS companies where they don't have to sell me equity. And she said, come on, let's do it. So it's important to me, guys, that she's really happy with the information I just gave you. So I'm going to be very vulnerable. What did you guys think? Scale of 0 to 10, 10 being you love the content, you learned at least one thing new. Let me know in the chat. What did you guys think, 0 to 10? And we'll look at that. And it's important to me. The feedback's important. Shamali, is there any other questions you think I missed that I should address before I jump off?
I don't think so, Nathan. I think we have already addressed all the questions. Even if not, we can always do a Twitter chat later on if you're interested.
That's great. Well, guys, thank you so much. Gopinath, I see you said 11. Pratik said 10. Karn said 8. Karn, I'm going to find you. I'm going to come after you. I'm going to earn those extra 2 points.
She will give you 100.
Pratik, there we go. Give me 100. Pratik, I appreciate you guys. Guys, thank you so much. You guys are really wonderful. And Shamali, again, congrats on building something very special. I predict big things for SaaS Insider over the next 1, 2, 3, 4, 5 years.
Thank you,
Thanks for having me on.